Hey everyone, it is Keeping It Real with Nikki and Jim, and happy holidays, everyone. We made it almost to the end of the year.
Hey, it is
Jim.
beautiful out. If you're in Kitsap, you know it's about 25 degrees, and we just had about 6 inches of snow. In fact, right behind Nikki, it's snowing.
I'm trying to point. It's weird. I love it. I don't know how to do this yet. There we go. It's this all over. What can I say? This is why I don't talk today, Jim. Anyway, we are back with Kerri Selby today, and we are super excited to welcome her back. As we said last time, Kerri has been in the business with Fairway Independent Mortgage Corporations for about 7 years, and she's been a oh goodness, I don't have my notes in front of me. She can give us a little quick to do about her again, but not only is she an amazing mortgage lender, but she also has been very involved with Toys R Tots, which has just had a great turnout at this last Saturday. So we want to say congratulations to her and actually bring her in so that way she can get all the applause on her for the great job that she did for Toys R Tots.
Hey,
And
Thank
then I'm going to
you.
let Kerri go ahead and give her a quick intro about her. And then what we're going to do today is we're going to talk about buyers and getting loans and what kind of loans that they're going to qualify for. So, Kerri, I'm going to send it over to you.
Excellent. And thank you guys for coming out and volunteering for Toys for Tots. Really, our volunteers are at the heart of what we do, and we can't do it without you guys. So appreciate all of your help coming out and helping organize toys last Thursday.
Thank
So
you.
a little
It
bit
was
about
so much fun. It was so much
it
fun.
was.
And a little bit about myself. I have been in the mortgage industry for 7 years. Just a little recap. I started out just being an administrative assistant, doing file setup, moved into a processing role, and then became a loan officer 4 years ago. And it's really what I'm passionate about because everybody's ultimate American dream is to own a home. And so I get to have a huge part of that. And that is what I really love, especially working with veterans and first-time home buyers.
And you do an amazing job, I must say.
Thank you. I appreciate that.
So we're getting into the summer or the spring, and I know that's our busy time of the year for real estate. I don't expect this year to be any different. I don't think I kept you this, but hopefully we kind of talked about it before. I know rates have went down, is what I've been hearing. I've been a little bit sick the last couple of days, so I haven't kept totally up on it, but I believe it dropped again just slightly, right, from last week.
It did. And then it went up just a little bit again because of what's happening in the Japanese market, believe it or not. So they wound up selling off a bunch of US bonds and buying more yen to help their market. So things are still a little shaky, but definitely seeing improvement more than increase. So that is always good news.
Okay. And, again, like I said last week, the deficit's still there. So,
It absolutely is.
So anyway, but we are expecting a lot more buyers. It's that time of year when it happens, and so buyers come back, and so we thought we'd just give you some different description of different buyers, and you can tell us what type of loan that you thought they would get, and how that would affect different things, and all that good stuff. So Jim, do you want to start from here since I'm not making any sense to?
Yeah, I think that's a great subject, just kind of investigating what are the different types of loans that are available, because I think it will show you, those of you that are watching, what you can do today with what's available or what you can prepare for. And so we want to kind of go over those. So I want to give you just a scenario to start off with, because I've seen a number of people like this that might have good income, good credit, not that much debt, but have very little down. So if we could just jump into this, Kerri, with what would be available for, say, a person like that?
Great question. There's lots of programs out there, and the state of Washington has an organization called the Washington State Housing and Finance Commission, and they come in and assist first-time home buyers to help with down payment, because that really is the big part of things. You have to not only save for your down payment, but you're also looking at closing costs. So one of the best and lowest amounts of money to come in with a down payment is for an FHA loan, which is 3.5%. They also do conventional loan products as well, and USDA and VA for down payment assistance. A lot of people don't realize that even though a VA generally has zero down, the down payment assistance helps them with closing costs. So it helps in various different ways. The only difference between an FHA and a VA or conventional loan is going to be the amount down, 3.5% for FHA, 5% for conventional. The mortgage insurance is just going to look different. It's higher for FHA versus conventional. So I will definitely look at which program would be the best fit.
Okay. A couple of years ago, and I'll just jump into this one. My first house was an FHA, and so we just scraped as much as we could and got together. But that house was only $58,000, so it wasn't.
Wow.
So that was great. But this last one, in fact, Niki sold me the house that I'm in right now, and that was kind of a DPA, a down payment assistance program. Could you explain that a little bit? Because basically I got in for almost zero down.
That's correct. And with the down payment assistance program, the state of Washington does come in with help for the down payment. And it's considered a gift, but it is repayable. Whatever you borrow, that 3.5% is going to get paid back when you either refinance the home or sell it. But the beauty of it is it does not accrue any interest. It's considered a silent second. So if you borrow $15,500, you're going to pay back $15,500.
So that's a great deal. But Kerri, I also, so with the down payment assistance program, there's also certain things that you have to do on top of just going out and buying a house, correct? Like some education, you have to take a class.
There are first-time homebuyer classes that have to be approved by the Washington State Housing and Finance Commission. That is correct. I am able to not only do those types of loans, but I can also teach the class as well with other people that are certified. So such as Niki, we could do a class together for that. They do have an online program that is $50 versus a free class in person. So that's the difference.
Yeah. No, and you learn a lot of really great. You learn a lot of great information. So it's a really cool class too. I mean, it's something that like I gotta go learn about this, but it really gives you a lot of insight and really kind of helps you along the process too. So I think it's a good thing, and it definitely, like you said, it's a great benefit. So.
And it teaches you what to expect when you're buying a home. Most people do not understand the cost that could come along with being a homeowner. You no longer have a landlord that's going to come in and fix your leaky pipes. Yes. You have to make sure that you understand the expenses that can come with being a homeowner.
Okay. And you brought up conventional and FHA. And is there a difference between those as far as the PMI?
There is. So on an FHA loan, you're going to have upfront mortgage insurance. So that will be paid and it can be financed in the loan. But then monthly, it's a set of 0.85% of the loan amount. So monthly, you're going to be paying that 0.85%. Where on a conventional loan, it can be anywhere between like 0.20 up to 0.30, depending on credit and your loan to value.
Okay. And then once you pay off a certain amount, doesn't that drop off with conventional loans?
It does. Once you reach 20% equity in your home, that automatically drops off. With FHA, it's life of the loan.
So that was a great benefit. When I talked about that, I did a DPA on mine, had mortgage insurance, but within a year and a half, now that was because the economy, home prices were going up during that time. But within a year and a half, I refinanced and got almost all of that taken off, which was like $380.
It makes a huge difference.
Yeah, just to get into a house, so you start building equity, it's a great benefit.
And I say it's a great stepping stone. It's not a forever loan. It's one that helps you get your foot in the door with the lowest amount down.
Awesome.
And that's a good point right there is because a lot of people, you buy a house and then you just kind of walk with your lender and you maybe don't keep in touch and maybe you actually should. I mean, because then you can find out, there's a better rate. There's, so, I can drop this off. I don't have to keep this. And you can get all the ins and outs and what to do. So, yeah, keep talking to your lender, guys. Don't give up on your lender. Even after they sell you to the house, keep talking. Same thing with the real estate person. They know all kinds of people and can help you get contacts and whatever. So always talk to your professionals. They know the business.
And my goal is to keep track of your home value and the rates, and to make sure that when the appropriate time to refinance happens, I'm reaching back out and letting you know I am still your resource for that.
Yes.
In
Perfect.
fact, it was my lender who called me to let me know, hey, Jim, I think we can save you some money. So you guys provide an excellent service. So we encourage you to call Kerri, check this out. If you have questions, you'll meet with people, right, to go over all this.
Definitely, I will.
So, cool.
Okay, hypothetical number 2. So I've got 2 different military clients. One of them is brand new and never bought a house before. What is his program going to look like? I've got another military guy who's been in the military for a while. He's had a house. He's actually getting ready to buy a second house, and he wants to know if his VA can apply. Can you answer both those questions in different orders?
I can. So for the first person who is a brand new VA buyer, you are given a certificate of eligibility once you have reached 3 years of time in service. And with the VA loan, there's no private mortgage insurance. Instead, it is a guarantee from the VA. So you pay a funding fee. The first time use is 2.3% of the sales price of the home, and that is financed, or you can also choose to pay it outside the loan as well. The beauty of a VA loan is that you're not coming in with any money down. And the closing costs, they're capped on how much you can be charged. It's 1% of allowable fees. So we can go over that in more detail at a later time, but definitely know that the closing cost for a VA loan is going to be lower.
No,
for your scenario,
you definitely deserve that.
Yes, most definitely.
Is there any gift possibilities for closing costs?
There are. You can receive gifts from a relative.
Okay, that's
and
nice.
That entails being able to get a gift letter. We are going to need access to a bank statement, all pages, nothing blacked out. People try to send us over things that are redacted, but we need all of the information on there. And we promise that it's going to stay secure. But a gift letter is signed, and then a bank statement from the person getting the gift. And then we need a bank statement to the person receiving it to show the funds have been deposited in their account.
Awesome.
So as far as the second scenario, you can use your VA loan concurrently with another one. You just are required to use a down payment. So I have this worksheet that I fill out and I calculate how much that down payment would be, because you are allowed $36,000 in entitlement. So there is a calculation that shows what you've used and what is left over, and we take a percentage of that and apply it to the new loan. But just know that you will have a financial obligation for a down payment on that one.
Okay. And that's typically just a regular rate then, correct?
It is.
Okay, perfect. Well, those are some great deals. So Jim, do you have another one, or do you want me to throw one out?
Well, I don't know if this is applicable. I was thinking of rehab loans. Do you guys do those?
Investors sometimes. What about investors? Let's talk investors.
Yes, there are rehab loans that you can do. They're for primary residences, though. So A lot of people that deal in investments are dealing with money that they've gotten from previous investment properties, but the FHA rehab loan is for primary residences only. Okay. What a lot of people don't know is if you currently live in a home that's a VA home, you can do a refinance with the rehab loan. So if you want to make changes on your current home, you're able to do that just through a refinance, and they take the equity in your home and you get the bids for the work that needs to be done, and you can just do it right there for your current home.
Mm-hmm.
Nice.
Okay. And that takes a little bit of more effort. I know, because I've been on a couple of those before, and it's getting contractors out and that kind of stuff and getting some numbers. It takes a little bit more work, but yes, it can be a great deal if you can find the right property, and it's usually not on the open market, though.
Yes, and they have longer close times. You will have to get bids from several contractors. We're always going to take the lowest bid. And then the one hard thing that we find with contractors is they want to get paid right away. With a rehab loan, they're not going to get paid until the loan closes. That's when the funds are dispersed for the work that has been completed. So it is a little stickier, but it can be done.
Okay, perfect.
Good.
What about USDA? we have some of those areas here locally in this county. How are those programs looking? Because I know that they were kind of popular 7 years ago. They've kind of dwindled off in the last couple of years. And are you seeing an increase coming back with those type of loans or no?
It really just depends. You can go on the USDA website and pop in a zip code or a property address, and it will let you know if it's eligible, because a USDA loan covers rural properties. So it really can't be in the main part of the city. Usually they're homes that are a little farther out. They are definitely a better program for people that don't have down payment funds. You can come in with zero down on that as well. And it's quite like the VA loan where you're not paying monthly mortgage insurance, you're paying a guarantee on that one as well.
Okay, nice.
Nice.
Okay, I think we covered them all. Am I missing something? Kerri, you tell me. You're the pro here.
No, I think we were just gonna, if we had enough time, we were going to talk about conforming versus jumbo loans, but we can definitely visit that at a future time if that's something that we want to discuss.
We have a few minutes. Why don't you go ahead and at least get us started? And what we might do is if it gets to be too in depth, we'll come back. And I also want to check our chat, see if anyone's sending us amens. I don't think we have anything coming in on the chat, but let's at least start it. And if we want to continue it on and get more questions about it, we can definitely do that.
Well, I'll just be brief. Basically, every year we are given a conforming loan limit. And for the year 2022, we were at 647,200. So for the year 2023, we saw property values increase so much that they've increased it to $726,300. So what that means is if you have a loan that is that much, you're going to just go a regular conventional route with normal financing. Anything above that, it's a little riskier for myself as a lender to take on that type of loan. So the credit score requirements are higher. The down payment might be considered higher. The rates are a little bit higher. And you will also, in most cases, need some reserves. So meaning you have to prove that you have about 6 months of principal, interest, taxes, and insurance in the bank to cover any payments, just in case something happens financially and you can't afford that one payment.
That makes lots of sense.
Mm-hmm.
Yeah. So you mentioned credit limits. How are those with the other loans? I don't think we touched on that. Not to go backwards, but we're going to go backwards for a second because I know a lot of other people are in those groups, and majority of people probably are. So I kind of want to make sure that we don't skip that part, and that's a really important thing that we didn't even touch on. So
for sure. So for a VA, they have the lowest credit limit, which is 580. The next tier is for most other loans is 620, unless you are purchasing a manufactured home. A lot of people don't realize that there's more of a risk in purchasing a manufactured home. So your credit score is going to be a little bit higher, depending on the program, between 640 and 660.
Okay.
But it's pretty straight across the board with the credit scores. Qualifying is 620.
Okay. Nice. Okay.
And usually
the better you are, the better you saved your money and did the right thing, the lower your, the better rate you're going to get. So
exactly.
So don't go crazy this Christmas shopping.
Don't put a lot on credit.
I just started shopping. It's so bad this year. Oh my gosh.
It's hard. This year's a recession. Not as many people have those reserves in the tank. So you might have to do a little bit on credit.
Mine's been pretty much strictly cash this year, and it's just going to be like, there you go, I'm done, and that's it. There's no more.
Yes, exactly. A little leaner, but you have to just be thankful that you get anything, right?
Right, exactly. So everybody's got good plans for the holidays?
I'm just excited. My son is home from North Carolina for Christmas, so excited to see him here. And I have all 4 of my children under one roof, so that for a mama heart is the best present I can get.
Oh yeah. And he looks so handsome in his uniform, I have to say.
Thank you. Thank you.
Try to get up there.
I think so too, but of course I'm a little partial.
Yeah. Jim, what do you got going on for the holidays?
Well, Kaylee and I, my daughter, we were practicing Christmas margaritas, which was kind of fun. But we'll be together with family and looking forward to it. My 2 sons and my daughter and 2 grandkids. So it'll be fun. Little 2-year-old grandkid is fun, with presents. That's hilarious.
Yes. Can I tear it open? Can I not tear it open? That's
Right.
Or they just go right to the next one, you know.
yes.
Yeah, that's always the fun part. All right, you guys, anything else to add today that I otherwise will call it a wrap for today?
I think
Well,
that's
just
it
a
for
Merry
me.
Christmas.
All right, Merry Christmas, everybody, and
Merry
we will
Christmas.
see you next Wednesday at 11 a.m.
Yes, looking
Thanks for
forward to
keeping
it.
it real with Niki and Jim and Kerri today. Thanks, guys. Bye-bye.
Thank
Okay,
you.
goodbye.